Welcome back. You're watching us here on Bazaar Morning Call. Let's get chatting with the first corporate that we've lined up for you on the show. It's Biocon. It's opened its first manufacturing facility in the US. Siddharth Mittal, the MD and CEO of Biocon, is who will be speaking with. Morning, Siddharth. The three main areas that we'll be talking about. One, your plans ahead for the newly launched US manufacturing facility. Status of the key launches in the weight loss drug market, and also the company's own outlook on debt reduction and balance sheet improvement. So let's start with the US manufacturing facility itself. Congratulations on having opened it. How does this align with a broader push by the Trump administration for manufacturing in the US? That's point number one. And secondly, how will you balance the advantages that you have from Indian manufacturing, the cost advantages, versus the higher cost US base? If you could throw some light on this.
I think let me go back to 2023 when we had acquired this facility. Of course, the work on acquisition started prior to that. And back then, of course, the world was not talking about tariffs the way they are today. Of course, there are no tariffs yet on pharmaceutical products, but I think this facility was planned to get closer to customers, to provide that supply chain resilience that our customers in the US were looking for. And I think being closer to patients and customers is something which was very strategic move. We manufacture roughly 2 billion tablets in this facility, starting with statins. We've already received 4 approvals from this facility and 2 products are already commercialized. I think in the next 1 year or so, we expect the entire capacity to be utilized for manufacturing products, which are currently being manufactured in India or other parts of the world. So we will be consolidating all the supplies from CMOs or our other facilities into this facility. And of course, this provides us greater control of our own supply chain, quality, cost. When it comes to cost comparison, of course, there is a big difference between the labor cost and other operating overheads between India and the US. And I think today we are looking at ways, how do we get to similar levels as India? Because, the facilities in the US are run in a very different way than the facilities in India. So digitalization is something that we are looking at. We are looking at the right headcount. And over a period of time, we think that we'll be in a break-even position. This facility also offers us an opportunity to participate in the local US federal business, which is an important thing, which is also a long-term contract. Typically, you get 5-year contract if you manufacture drugs locally. And that, of course, should give us an uplift in our volume as well as the revenue and the margin in the coming years, which will offset the higher cost in New Jersey.
Siddharth, hi, morning. Prashant here. Just a quick, so what is the, at full utilization, what is the revenue run rate for this plant, from this plant?
See, typically on statins, we do roughly $40 million of business. And we think that once it's fully utilized, we should be able to do similar levels of business. Of course, there is annual pricing pressure that happens and the current base keeps eroding over a period of time. But the trajectory of revenue would be between $30 to $40 million.
Which you already do, which you will now do from there. That's basically, it's a shift.
Exactly.
Okay, got that. So, all this basically you were outsourcing and getting it done from elsewhere, which you will now do in-house.
That's correct.
Okay, and can you give us a margin impact because of this? Because it's higher cost?
Short term, there would be an impact, Prashant, but as I said, that it's more strategic move because
I
today,
completely understand. But since the cost of production, we've been told, we spoke with companies like Lupin, etc. They said, well, like to like. It's not percentage. It is 5 times, 6 times, 7 times higher cost to make in the US for the same tablet. So I'm just trying to understand what's the near term. I know the strategic move, but what's the impact margin wise?
See, it will be difficult to quantify, but let me contextualize in a different way. We have our first oral solid dosage facility in Bangalore, which is at 1/4 the capacity of this facility. We operate with 250 people, and this facility at 2 billion tablets will be operated with 100 people. So you can imagine that, yes, the wages are higher in the US, so maybe 3 times or 4 times, but number of people required to operate the facility is significantly lower compared to what we have in India. So we will have an advantage of that. But short term, again, which is till the facility reaches its peak capacity, we will see a margin impact.
Do you expect will you file for a lot of the new
Yes.
drugs, etc., through this facility? Do you imagine it'll be easier as a process from the FDA?
Absolutely. And that's in the plan. Apart from the products which are currently being sourced from CMOs will of course be moved to this facility, but we are also looking to file many more drugs from this facility because Bangalore facility is running chock-a-block right now.
And what are the drugs that you're looking to file?
Yes, we will be filing in the coming years.
What drugs?
Already started the filing, in fact.
I'm saying, what drugs are you looking to file from here? I don't think he's, willing to say that. I just wanted to know, what are the drugs that you will be focusing on over and above what you're doing already?
Yeah, portfolio comprises of a lot of metabolics, cardiovascular drugs such as statins. So the 3 products which are already approved are 3 statins such as pravastatin, rosuvastatin, simvastatin. And there are other SGLT2s and DPP4 drugs in our portfolio which will be filed from here. So it'll be mostly focused on metabolics, cardiovascular.
Just a quick update on the weight loss drug launch. Could you give us a sense, timelines?
So Ozempic will be filed in many markets, generic version in this quarter. And we are expecting the review cycle anywhere ranging between 12 to 15 months in few markets. There are markets where the regulators take much longer time. So we are expecting by end calendar 26 that at least we should be in a position to enter a few of the emerging markets. The US, of course, opens up in 31. US and Europe opens up in 31.
Okay.
Prior to that, we'll be launching liraglutide in many markets. We've already launched liraglutide in UK and Europe, and we'll be soon launching in the US sometime in early calendar 26.
How's the response been in UK and Europe for liraglutide? What's the run rate that you can estimate from here? And US, could you update the timeline?
So we are expecting approval by end of this year, early next year, and then we'll launch immediately after that. And Europe and UK, well, the market in UK is very small, so I will not really put too much value to it. Europe is still a decent market. And after we got the centralized approval, a lot of in-country approvals have to come in, like Germany, which is the largest market. We still have to receive the approval from the regulator there.
Siddharth, you said Ozempic, right? Which is Novo.
Yeah, even liraglutide is Novo. It's Victoza and Saxenda.
What about for Mounjaro? Would you be applying?
Yes, we'll be applying in next year. So in May 26 is when the NC-1 date opens up in the US, and we'll be filing on that day.
Yeah.
So the market opens up in 34, so there's still a lot of time for that drug to be commercialized.
In India, Siddharth, I'm told that Mounjaro, I'm not sure if it's the top selling pharma brand now.
Yeah, Ozempic and Mounjaro. I think Ozempic is a bigger brand than Mounjaro.
Wow. I mean, very, very quickly, right? The ramp up, what we've seen in India and around the world as well.
If you look at the overall GLP-1 opportunity, it's expected to be over $150 billion just in weight loss and diabetes. And I think Biocon is very well placed to play in that space. We, of course, have a wide portfolio of insulin. And when you look at insulin and GLP, we will be one of the very few companies globally who can provide both the drugs at scale, vertically integrated. So we are very well placed to play in this space.
Yeah, and it's highly underpenetrated as well as a market in India. You know, the top selling drug in India does a little over 2,000 crore in annual sales. We don't have $1 billion drug yet. So let's see how that pans out. Obviously, there is a fair amount of runway for growth here. Keytruda was one of those successes that we recently saw. But just finally, before we let you go, Siddharth, you raised 4,500 crores via QIP. You're looking to improve your balance sheet as well. What's your debt repayment timeline, and what would your interest cost savings be over the next, say, 12 to 18 months?
So the 4,500 crores is going to be deployed to buy back stake from private equity or give exit to private equity investors, comprising of ADQ, Goldman Sachs, to whom we have already provided an exit. And then there are a few more obligations which are coming up by end of this year. And that will allow us to increase our stake in Biocon Biologics, which was earlier at 72% to now closer to 78%. So this does not impact the bank debt or the bond that we have, which is roughly over $1.25 billion, of which 800 million of bond is payable in 2029. And the remaining amount of 400 odd million, which is primarily comprising of long-term debt, where the repayment starts ballooning from 26, but the main repayment is in calendar 27-28. So those repayments will, of course, happen from the internal accruals. And I think the whole deployment of QIP funds, as I mentioned, was to give exit to the private equity investors, which of course will strengthen the balance sheet and our holding in Biocon Biologics.
But you also refinanced the $1 billion worth debt, right? How much lower was that in terms of cost?
I think the current debt is at 6.75%. Earlier was slightly above 7. So we would have marginal cost saving in the bond, but the interest cost on private equity obligations, that would start tapering off. So the Goldman Sachs, which had a coupon of 5% dollar, that would start tapering off from July. And then once we pay the other investors, which has coupon of 12% rupees, that also would start reducing our interest liability.
Okay, all right. We'll leave it there. Siddharth, thanks very much for joining in and running us through all those details very patiently. Appreciate it. And we'll touch base again as that US facility ramps up and some of the other applications go in as well. So that is Dharmesh with some perspective. Let's just